Hey everybody, it's Jason Irwin from Angle & Volkers. Welcome back to my video blog, and today we're going to be talking about the market reports from January. And I also have a little bonus information at the end of it I look forward to sharing with you. Hey everybody, welcome back to the video blog. As promised, I have the info right here in front of me talking about the market update, market snapshots for Scottsdale and Paradise Valley for January of this past year. So let's just jump right into it. And by the way, you do want to stick to the end of the video, stick around to the end of the video, because I've got some really great information from the Cromford Report that I want to share with everybody. But let's jump right in. Let's talk about Scottsdale. In January 2022, we had 315 active listings. That is down 36% from the prior year. The average sales price was $1,282,390. That's up 17% from just the prior year. 17% in 1 year. The average days on market were down 40%. The average days on market went from 77 days just a year ago down to 46 days on the market this past month. In the monthly sales, just this past January, there were 390 monthly sales. That is actually down 22% from last January. Last January we had 497 sales. This January 390 sales. That really doesn't surprise me, especially how this year started with some things going on. To see that number, I'm not worried about that number. The number of active listings being down, not surprised. The value is still going up, and I'll share later. Not surprised. The average days on market being down 40%, only 46 days on the market. Not surprised. This has been holding steady month over month for well over the last year. Let's jump right into Paradise Valley now. This past month in January 2022, there were 87 active listings. That's down 35% from just a year ago. January 2021, we had 136 active listings. This past month, only 87, down 35%. The average sale price was $4.39 million. That's up 41%. Up 41% from a year ago. Last year, the average sales price was $3.07 million. This year, $4.39 million last month. Up 41%. That's an amazing increase. Again, doesn't surprise me, and I'll share why. The average days on market, 85 days were the average days on market this past month. That's down 34% from last year. Last year, 128 days was the average days on market. This year, only 85 days. Again, down 34%. And again, the total monthly sales for Paradise Valley this past month were 38. That's up actually 15% from last year. Last year we had 33. This year we had 38, up 15%. So if I'm comparing Scottsdale and Paradise Valley, they all kind of fall in line as far as the active listings both being down, the average sales price being up, average days on market being down. Only difference being the monthly sales. Scottsdale is what I would have expected for January. Paradise Valley kind of surprised me a little bit until I looked into it a little deeper. We've had a lot of new builds, a lot more construction going on, a lot more demand from out of state for Paradise Valley. So that number doesn't surprise me, and it's actually higher than I thought it was going to be. So that's very good sales for January for Paradise Valley. And now I want to really get into real quick is going over some information that I found out at a recent meeting I attended with the Cromford Report. And this just goes over the overall Greater Phoenix talking about the greater Phoenix area in whole. As we all know, the appreciation of home values are increasing, and no one's expecting that to slow down. They're expected to continue to rise through at least June, and more than likely that rate of increase is going to increase. So the appreciation of home values isn't slowing down anytime soon. We still got the pedal to the metal on that. And here are some interesting facts. The annual appreciation for Greater Phoenix last year was 26.2%. In a normal seller's market, it's between 4 and 10%. Again, last year, annual appreciation was 26.2%. Normal seller's market, 4 to 10% in Greater Phoenix. Unreal. Sales over asking price, 42.9% last year. Normally in a seller market, it's 15 to 18%. Again, last year, sales over asking price, 42.9% last year. Normally in a seller's market, it's 15 to 18%. The sale price list price ratio last year, 99.8%. Normally it's 97%, so that hasn't adjusted much, but to go up just over 1%, almost 2%, for that ratio is quite significant. And again, for the Greater Phoenix market, the median average sales price was $440,000. That is up 29.4% from last January. It's just, our market is on fire. It's not slowing down. And interesting fact that I made a note that I really wanted to share with you were active listings in Greater Phoenix this last month were 714. From 2015 to 2019, the average active listings were between 3,300 and 4,400. Again, the number of active listings in Greater Phoenix last month were 714. From 2015 to 2019, there were 3,300 to 4,400. That is amazing. It goes back to what I've said and everyone has been saying. When there are 290 people moving in Phoenix, the Greater Phoenix area daily, that number just proves that. And that number actually encompasses the whole Scottsdale, Paradise Valley, Carefree, Cave Creek, Rio Verde, and Fountain Hills area. So what we would normally see. So it's just amazing, the demand in the East, Northeast Valley. And lastly, I just want to talk about the iBuyers. I get asked about it a lot, and we all know what happened to Zillow. They're no longer in the iBuyer market, but more importantly, what we are finding out are the other iBuyers: Open Door, OfferPad, Invitation Homes, which is the hedge fund BlackRock owns. What's been happening is they've been having to pay higher for homes and selling them for less. So their margins have gone down. In the last 6 months alone, let me rephrase. In the last year, they were at their rate of their ROI was above 7%, 7 to 10 or plus percent on their deals. Now, in the last couple months, it's down below 4% or less. So we're seeing this convergence where their business model isn't working. I'm not saying that the same thing's going to be happening to these companies like Zillow, but they're going to have to change their business model if they're going to stay in the market. And if these companies start to slow down with their purchases in our market, that only helps all of us, all of you, all the buyers out there, because that's just going to open up more inventory for the average buyer to be able to find a home, and us not have such a low inventory with these hedge funds and these iBuyers, snatching up these properties. So saying that, I hope you enjoyed this month's market update. If you have any questions regarding this market update, the info from the Cromford Report, or if you have any questions on anything else, please reach out to me anytime. My team and I are available for you always. See you next time.